A unit of Berjaya Corp is acquiring 6 parcels of freehold land collectively measuring about 20,977.15 square meters in Yokohama, Japan for 12.66 trillion Japanese yen cash. BCorp said its wholly owned subsidiary Berjaya Yokohama Hospitality Asset is contemplating the development of a Four Seasons Yokohama Harbour Edge project on these lands, comprising a luxury hotel and upscale residences, aquarium and retail outlets. The estimated gross development costs, including land acquisition costs, amounts to about 101.54 billion Japanese yen, while the estimated GDV value is 138.17 billion Japanese yen. BCorp said the project is expected to be developed over a period of 4 years and funded by bank borrowings and internal funds. The lands are the last waterfront undeveloped area in Yokohama City, situated in the vicinity of key city landmarks such as Yokohama Landmark Tower and Yokohama Museum of Art, the group said in a BORS filing. Meanwhile, BCorp was among Bursa Malaysia's top 10 most actively traded stocks today, ending the day 1.69% lower at 29 cent with over 45 million shares transacted. It came to light late last night that BCorp's founder and major shareholder Tan Sri Vincent Yioun intends to pare his stake to 19.6% from 26%, paving the way for the group's potential acquisition of a 51% stake in a financial services company. In a statement, BCorp, where Tan is chairman, said it is in the midst of evaluating a potential acquisition involving a licensed entity governed by Bank Negara under the Financial Services Act 2013. Apart from banks, other businesses governed by BNM under the FSA include insurance broking, money broking, financial advisory and digital banks. The announcement also casts the limelight on foreign insurance companies that have yet to meet BNM's 70% shareholding cap. These companies include UK-based Prudential and Tokyo Marine Holdings. John Soh, Chee, accused mastermind of the 2013 penny stock crash, has been sentenced to 36 years in jail, while his co-conspirator Su-Ling has been given a 20-year jail sentence. Both Soh and Kwa are appealing against their sentences. The prosecution had previously sought 40 years jail for Soh and 19.5 years imprisonment for Kwa. In issuing the sentences, Judge Ho Siu-peng adjusted Soh's sentence downwards to ensure that the sentence is not crushing for the 62-year-old. The imprisonment includes his time of remand since November 25, 2016. Kwa's sentencing is 2/3 of Soh, given that she is less culpable and less involved in the scheme. In her oral judgment, Hu highlights the necessity of the substantial sentencing to capture the gravity of the duo's wrongdoing. She said that by the crash, immense harm was caused. Soh and Kwa were on May 5th found guilty of the whole litany of charges they were facing under 3 groups of criminal conspiracy, including for forced trading, price manipulation and deception. The 2 long-term partners in both business and personal affairs had been on trial since March 2019 for orchestrating the manipulation of 3 penny stocks. These 3 penny stocks are Bluemont Group, Asia Sons Capital and Lion Gold Corp. The stocks crashed on October 2013 and destroyed some 8 billion Sing dollars in market value. The episode has been described as Singapore's largest ever case of share manipulation and involved 189 securities trading accounts held with 20 financial institutions and 60 individuals and companies. Tiong Logistics Holdings has entered into a JV agreement with Johor Corp to develop a high-tech logistics industrial park on a 300-acre land in Sedenak Technology Valley, Johor. In a statement, Tiong said its wholly owned subsidiary Tiong Logistics Solutions inked the agreement with J Corp's unit J-Land Group following a preliminary collaboration agreement in August 2022. The JV company, known as JTN Logistics, will undertake the acquisition of the 300-acre land plus the development and management of the industrial park. TNLS will hold 51% in the JV, with JLG holding the rest. The development consists of ready-built and customized warehouses, factories and commercial buildings, along with integrated logistics infrastructure for global businesses. JTN will also acquire the development land from JLG for a purchase consideration of 52.3 million ringgit. Tiong managing director Ong Yung Nyok said the JV is recognition of the group's capabilities and a milestone in its track record in transforming Johor's logistics landscape over the past 4 decades. He adds that the technology-enabled development will also enhance the state's logistics infrastructure to support greater international connectivity and trade. Kumpulan Kitacon has set its initial public offering price at 68 cents per share, aiming to raise 51.74 million via the listing exercise to mainly fund the purchase of construction equipment and construction of a storage and refurbishment facility. Slated to list on the main market of Bursa Malaysia on January 17, 2023, the IPO entails a public issue of 76.09 million new shares, as well as an offer for sale of 62.5 million shares by way of private placement to Bumiputra investors approved by the Ministry of International Trade and Industry. Of the 51.74 million expected to be raised from the listing, Kitacon has earmarked 20 million for the purchase of land and construction of a storage and refurbishment facility, 18 million for the purchase of aluminium formwork systems, and 6 million for scaffolding and cabins. Managing Director Tan Aki said that looking ahead, its goal is to broaden its reach and expertise in township construction as it aims to secure more contracts from new clients while conditioning to foster its business relationships with existing clients. Going forward, Tan said the company has an outstanding order book of 853.6 million ringgit. Touching on Kitacon's dividend policy, the company said it intends to distribute at least 25% of its annual audited PAT attributable to its shareholders. Plantation Group Kim Loong Resources net profit for the third quarter of FY23 dropped by 10.6% year-on-year as revenue for the quarter under review softened. Net profit came in at 36.74 million as revenue declined 18% to 402.41 million from the 492.8 million posted in the third quarter of FY22. Despite the softer numbers, Kim Loong still declared a special dividend of 5 cents per share. The planter said although the current high production season may cause pressure on CPO prices, the commodity should still be able to average at around 4,000 ringgit per tonne for FY23. Kim Loong believes that it will still be able to benefit from the current CPO price level and is poised to achieve a record high revenue and profit for FY23. However, the group still acknowledges the challenges such as higher labour and fertiliser costs.